Investors have a false sense of safety in the stock market. A psychologist by the name of Gerald Wild came up with the term homeostatic years ago, and I believe this is totally relevant in today's market. It essentially means that when the environment comes to feel safer, and the key word there is feel safer, not is safer, it feels safer, people's behavior becomes riskier. A great example he used was people will probably drive faster in a big SUV than a little tin can of a car. It doesn't reduce their risk that they're in a bigger SUV that they get in a car accident. Relating it to today's market, investors seem to feel safer because of the long bull market. As the market continues to rise in the longer term, investors' appetite for risk increases. They do not realize that their behavior is risky because they have a false sense that the market will not drop. While the risk of their investments is high because of the confirmation day after day of the market going up, they don't feel that they are taking any risk. From my perspective, the risk just seems like it continues to climb as people try and chase quick returns. As an example, out of 672 launchers of new exchange-traded funds, or ETFs, so far this year, according to FactSet, 28% are tied to a single stock and 25% are leveraged, and at least 3 seek to double the daily gains or losses of cryptocurrencies. You may not want to believe it, but there is a lot of risk in markets today, and this could all end very poorly for those gambling in the market. Ultimately, there are 2 different types of investors. One is the long-term investor, who is investing to build long-term wealth, while other investors are in it for entertainment, and they enjoy the roller coaster ride with the thrill of gains and the pain of losses. This is a lot like the addiction that gamblers get, I would say. The difference is that long-term investors have odds of nearly 100% when you look at the long-term success of the stock market. Unfortunately, for those who do a lot of trading and take the higher risk road, well, the odds of making money over the long term is closer to 0, as many of them lose everything. If you check the price of your stocks, I would say much more than a few times a year, you're probably in it for the entertainment and will probably make poor emotional decisions when difficult times come. And they will, and for a while, but difficult times can and will likely come. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment. Feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.